or in short, CAR 2025 Media Briefing. Thank you very much for making time to join us today for a briefing. The press release, as well as the presentation deck, will be shared via downloadable link after the presentation today. So we'll share that with you, yeah? So, members of the media, it's my pleasure to introduce to you our panelists for today. Datuk Amirul Feisal Wan Zahir, Managing Director, Khazanah National. To his right, Datuk Hisham Hamdan, Chief Investment Officer of Khazanah. And to his left, Puan Farida Bakar Ali, Chief Financial Officer of Khazanah. Without further ado, may I invite Datuk Feisal Zahir to present Khazanah's 2024 performance as well as our strategic outlook for 2025. Dipersilakan, Datuk Feisal.
Terima kasih. Thank you, Amy. Assalamualaikum warahmatullahi wabarakatuh, and good afternoon. First of all, I'd like to thank everyone for coming over and joining us this event, our annual event, annual review. And I hope you like the venue. It's smaller, but we still give refreshments after that, so don't worry. Okay, so we'll start. Now, what I'm going to do is I'm going to give you, as usual, give you a review of what happened in 2024. And here I'm going to talk about the performance. I'm going to talk about some of the highlights and really to talk about some of the key environment issues and investment environment as well. So I'll talk about that. And then we have the next step, which is looking at 2025 moving forward. So we'll divide into two parts. So I'll start with the main thing, okay, which is basically our performance, and then some of the highlights, just to introduce you with that at the beginning. So here's our performance. Okay. So 2024 was actually a good year for us. It was a good year. Our investments has grown by 18.8 billion in 2024. Kalau nak tengok the net asset value, which is in the middle area, net asset value increased to 103.6 billion. Our total portfolio size, which is our realizable asset value, which is one on the left, is 151.3 billion. So if you want to say, what's the size of our fund? Well, it's 151.3 billion. And the bulk of that, we look on the right here, is basically in our investment portfolio. We call it investment portfolio. That's the portfolio where we expect a commercial return. There are other investments that we make where it's developmental nature, development assets, done our impact, as well as our special situations, mainly in our airline, and that's to rehabilitate. Now, from a return perspective, what does this translate to? It translates to, look at the middle as well, NAV, net asset value, a return of 24.6% per annum on a total weighted rate of return. Now, we look at it longer term, 6-year rolling. This is when we started to look at our asset allocation in a more programmatic way since 2019. So since then, our 6-year rolling NAV TWR is 6.2%. We set ourselves a target, a long-term target of CPI plus 3%, which translates to about 4.3%, by the way, 4.6%. And we're above that. So last year is a recovery of, I guess, our portfolio, and we achieved a 24.6% return, 6.2% on a rolling basis. Now, what is actually delivering this type of results? And here we look at how we allocate our assets. Malaysia, public markets Malaysia, which comprises of 57.5% of our investment portfolio. Remember I said that investment portfolio is commercial returns. Now that has delivered the 6-year rolling 6.5 and a return for the year of 34.3%. Our public markets global returned 10.6%, which is a decent return. And private markets was hit by mainly because of China. As you know, rates are there for longer, so there are some impacts relating to private markets as a result. And for real assets, minus 3.5%, but that's mainly a currency issue as ringgit strengthened. But on a portfolio basis, we actually generated that positive 24.6% return. And this is part of rebalancing, because every year there's some markets that do well, some markets that don't. And that's the strategy of having a diversified portfolio. Now, we look at the profits. Here's our profits. Our profit for the year is 5.1 billion, right? Which is actually a large number. And that came from a steady income from dividends. We also maintain a very active and disciplined monetization strategy, capitalizing on favorable markets. And we also had some value gains from our public market portfolio. Our dividends, we continue paying dividends. Last year we paid 1 billion. There was additional taxes and also various contributions to the government by other means as well. Our balance sheet remains healthy. On the right-hand side, you'll see that our debt level is 47.7 billion. From a asset to debt cover, RAV cover, we're at 3.2 times. Now that's quite healthy. Anything above 2.5 is actually deemed healthy for us. Now, let's talk about the environment in which we operated in, where we got this set of results. Now, first of all, if you look at the Malaysian market, because you saw there that a lot of the growth and also returns came from the Malaysian market. And that's because what Malaysia saw in 2024 was a strong and resilient economy. We had a strong GDP growth at 5.2%. We saw strong exports. We saw strong tourist arrivals. Approval for FDI came in. The stock market responded and actually improved considerably. TSR was at 17.7%. And we also had a strong ringgit at the end of the year. So that's something that is worth noting. We saw investor confidence back into the country and money coming back. Right? Now, what's underpinning this? What's underpinning that in confidence that we see in the economy, and this is actually quite helpful because it actually helps us sustain that strong momentum into 2025. And that's basically the economy of Madani framework, right? Now, I just got back from meeting investors internationally, etc., and they actually have their eyes set on Malaysia. They are looking at Malaysia. We had Invest Malaysia in London. We went in other places as well. And what they do see is, one, they see a framework in relation to the broad economic framework, very clear policies in relation to, for example, energy transition, semiconductors, industrial master plan. So that's actually quite clear programs in place. And at the same time, they also see execution as well. So we do see that investor confidence coming in and the fact that we have political stability as well. So that has helped. Now, looking at it from Khazanah's perspective, about 57.5% of our portfolio is in Malaysia. So we have to have a strategy on how we actually look at the economy in Malaysia. Here we have our strategy, which we'll introduce here, our Malaysian strategy. Right? If you remember, you know, the Madani framework, maybe you don't remember this, but you know, the D in Madani is actually Daya Cipta, right? And that's what we're focused on when we actually look at our companies and in terms of our role in investing in the Malaysian companies to so-called raise the ceiling, right? And we call this a strategy that for a nation that creates, right? It's a framework for a nation that creates. And let me just explain this to you. I always mention this to ask to many people. You know, Malaysia was once, if you remember, on par with Korea, Singapore, at least when you played football, right? And when you actually look at it now, from a currency perspective, from wealth, that's actually gone far ahead. And what is it that we're missing? And what we're missing here is that we need, as a nation, to be more productive. We need, as a nation, to be more innovative. I know some, I think what refugee mentioned, you know, it's not just made in Malaysia, but made by Malaysians, right? So that is the focus that we have in terms of a nation that creates, the D in Madani, the Daya Cipta. And what we're doing here is we're actually clustering our investments into main areas, right, in order to achieve this. So first, and this is really done via our impact fund, Done Impact, which is transforming firms. I'll talk more about this a bit later. Now, the next thing is, rather than just holding an investment in Tenaga or UEM or Senviro or whatever it is, we've actually clustered it because these companies have a role to play in energy transition. Now, why is that important? This is a key enabler for the success of the country, simply because when you manufacture and export your goods, the carbon emission content in the product manufactured is actually quite relevant. So energy, clean energy is important. So that's where we're focused on that. Connectivity. We need, as a trading nation, you need to have connectivity for trade, for business, for tourism. And we've clustered our assets, whether it's Malaysia Airlines, Malaysia Airport, or some of our destination resorts, into this cluster called connectivity. And I'll explain more about that too. And we also have a lot of investments in telco, in digital, and we've clustered that as well in digitalization. So we've got TM, Celcom DG, Axiata looking at the basic infrastructure. You have some place in the tools, the economy, as well as the foundational enablers. So that's how we've actually, that we are grouping ourselves, looking at Malaysia and how we invest going forward. Of course, these investments do need to deliver a commercial return. Now that's raising the ceiling. Now, raising the floor is also there in terms of community development. Here, we focus on the Daya Cipta bit, which is building capacity in vibrant communities. And that's we do through our assets, whether it's Khazanah, Research Institute, Think City, K-Youth, etc., which I'll talk more about. Okay? So I'm going to talk more about the first pillar, which is transforming firms. And this is under Dana Impact. And I think you've heard this before. We allocated 6 billion on this. And what we're doing here, we're looking at the firm in the various life stages of the firm. Early stage would be the VC ecosystem. You know that we've combined Penjarah Capital and MAVCAP, so that has been successfully merged into our operations to establish under the name of Jelawang Capital, right? Just to let you know, Jelawang is the tallest waterfall in ASEAN, which happens to be in Peninsula Malaysia, okay? So it's a fund of funds. And we've already launched 2 programs under there, which is Emerging Fund Managers Program to promote local VCs, as well as Regional Fund Managers Initiative to attract foreign funds to partner locals for Malaysian opportunities. Now we've started something new here, which is the mid-tier companies, again, going up the value chain. And here we're looking at established mid-tier companies who are doing quite well. Their founders, their owners, they're doing quite well. But what can we do in order for them to grow even further? 2% of registered companies in the country, and mainly in the mid-tier space, make up about 40% of GDP. And that's how significant this is, right? Again, we're coming up programs where we're investing in funds that will look for opportunities either in private equity or in private credit. And a lot of players in this market, they say maybe the banks are not lending because it's too risky. So that we're creating that capital in order to fuel this company even further. And at the same time, there's also innovation programs where we kind of like help them in their growth strategy. The last one that we're looking at here is the semiconductor sector. And here we're playing a role. We've already invested in Cambrian Fund. This is together with the founders of Victrox and Southern Capital, creating a fund to help local entrepreneurs and SMEs in this space. We invested in Syntient, which is the American edge AI company that bought Knoll's business in Malaysia. And they're looking at bringing in their R&D or research in Malaysia as well. So this is what we do in terms of investments, trying to create an ecosystem to boost the semiconductor sector. And we've allocated $1 billion each for these programs. And that's the role that we do in terms of catalyzing or transforming firms for the country. Now next. energy transition. Here, I think the main focus here is, well, two main focuses. One is to look at the energy source. You know that UEM created a new platform called UEM Lestra. They are investing, they've already started investing in a number of assets, whether it's a 500 million, they actually looked at a gigaplant solar in Johor as one opportunity. They bought a controlling stake in NOR, which is the grid in the northern area. And they also recently signed, this is in 2025, of course, they recently signed with a number of industrial parks to purchase renewable energy from them under the CREST program. And Tenaga also has done that with bridge data centers. On the grid, obviously, the Tenaga has a lot to do to accelerate the grid improvement to cater for renewable energy going forward. Okay, so that's what we're doing for energy transition. Now, connectivity, there's actually a lot that we're doing. I'm going to talk more about the airline, airport, as well as what we're doing in terms of the destinations. Now, for airlines, I'm sure you're going to have questions later, okay? But I would say there's actually a huge amount of improvements in the airline, right? A huge amount of improvements in the line. They have a network plan, and it's pretty successful, and it seems to be working. Now, in the network plan, they've added 9 new destinations, right? They've added Paris, added Maldives, they added destinations in India, in like Kolkata, Amritsar, Trivandrum, Ahmedabad, what is the other one? Kartajat or something. There's a few centers which are actually doing quite well, right? They also added Chiang Mai as well as Da Nang as well. So these are the things that they are actually adding, that regional traffic that will then connect to other centers, whether it's Melbourne, whether it's Japan, or whether it's in Europe as well. So that's something which they are doing quite well. Now, last year, I think quarter 4, I think the whole industry was impacted by supply chain issues, and meaning engine reliability. I think that's something that hit a lot of players in the market, and they had to reduce their capacity in the 4th quarter. But having said that, their on-time performance, and this is the exciting thing, this is why I say airlines actually done well, is they rallied together and improved their program, and now the on-time performance, at least in December, is back to 77%, which is on par with Cathay, which is on par with ANA, for example. So that's something that they've done well. In terms of profitability, I think we'll wait for the airlines to make their announcements, right? Next, and this is also important for connectivity. Remember, when we say connectivity, this is actually a significant enabler for the country. The aviation sector has an economic multiplier of about 3.25 times. Every job in the aviation sector can actually generate about 6 jobs elsewhere. So it's actually a huge, important factor. And of course, you've got the airline, and you've got the airport as well that plays a major role. And I think for this one, this is where our airport, if you compare ourselves with other countries, neighboring countries like Indonesia and Thailand, in the last 5 years, we invested only about 1.3 billion in terms of capex in the last 5 years, whereas other countries invested. Indonesia is about 8 billion, Thailand is about 7 billion. Big difference, right? And of course, I won't mention about Singapore. That's actually way a lot higher. But this is where it becomes quite crucial. And for whatever reason, right now, I think we do need to play catch up. There's actually an important need in order to invest going forward, kind of like to play catch up. Where there's investments in the IT, the infrastructure, the security, there's actually a lot more. And what we're trying to do here is to strengthen, improve the passenger experience, strengthen the connectivity of the airport, and like I said, accelerate the capital investments. Okay? Just to share with you, as you know, the takeover process is already unconditional. It was declared unconditional on the 28th of January. and acceptance level at 28th of January upon acceptance was 94.47%, which is very, very significant. And the offer is still open. We have to, under this, the takeover code panel, to open the offer up until 12th of February. But with that, it will be delisted, I think soon by the end of the month. Yeah. Okay, so that is basically the connectivity. Now, at the same time, another thing that I'd like to talk about in terms of connectivity is KL, right? And here, we're also playing a role in trying to revitalize some of the heritage buildings within the KL Center. This is the Bangunan Sultan Al Samad. Some of you will probably see that it's been hoarded off a bit because that's work is ongoing. Karkosa Srinagara is another one, which we are doing. Again, that work is also underway for those two buildings. And the rationale here, actually, we actually have our subsidiary called Think City. Some of you may know this. They're very, very active in trying to rejuvenate downtown KL, right? Jalan Sultan, Taling Street, etc., with some grants given by the government and activate that. And the idea here is to make that area vibrant again, to attract tourism, to attract business, and anything. There's actually a lot of multiplier effect on that. So we're doing that. And this is something which we're quite passionate about because it will, I hope that with the success of this, it will make Malaysians proud to be Malaysians again. Okay. Make America great again. Okay. Now, digital. Here, what we're focusing on now is basically looking at the core enablers and strengthening each one of them. So for Axiata, you've heard about the merger in Indonesia. So a lot of work is already done to strengthen the core enablers. And of course, operationally, UEM Magenta is actually doing quite well overseas, actually. They're doing quite well overseas in terms of expanding, using digital to win mandates in the Middle East, in Singapore, in Taiwan. So that's actually a lot of work being done there. And at the same time, at the foundational level, and like I said, you know, we want to build capacity as well. We have K-Youth, which is a program. We've allocated 200 million, and that's to help graduates to be trained up into the technology sector as well, right? Technology, semiconductors. We brought in quite a few players to come in order to boost that going forward. But K-Youth is a key program for us. And last, I'll just mention very briefly, we continue to deliver societal value, building capacity environment communities through Khazanah, which is our main foundation. We've dispersed 86 million for 207 impact-based projects. We also have allocated quite a significant portion on scholarships, on education as well. And of course, KRI is doing very, very well in terms of coming up with thought-provoking policy recommendations. K-Youth, as I mentioned, we've actually trained 8,222 youths. So that's how a lot is being done. And Think City is very, very active in trying to look at KL, which is the KL Creative and Cultural District, KLCCD, as well as Georgetown Transformation. Okay? So I'll close the 2024 performance with this graph, simply showing that our NAV has grown by 5.9% cumulative average growth rate over the 20 years, right? So, and we've delivered about 19 billion of dividends and cumulative shareholder returns of about 90 billion to our shareholders. Now, 2025. 2025 is not going to be an easy year. Here we look at long-term megatrends and we look at the short and medium terms. The long-term megatrends, we will see, and this is what everyone sees, demographics changing. The world, like it or not, is aging, where the birth replacement rates by country is actually dropping, meaning to say that the productive workforce could actually be reducing. So that's something that we see not just in Malaysia, but in multiple countries. Deglobalization, of course, you can see this in the news. With geopolitics, people are looking after their own a lot more. Climate change, we all know of, and AI is a technology which is really, really changing the landscape of how we do things going forward. Those are the long-term trends. Short-term, what we see, of course, the immediate thing that we see is US. The US policies has a big impact on the rest of the world. With Trump coming in, you can hear his policies of low energy, low taxes, and also favoring the domestic businesses. It's actually quite inflationary, meaning to say that our view is we're likely to see rates higher for longer, given the policies that they have, which also means that we're going to see higher, stronger dollar, perhaps going forward, relatively to the other world currencies. So it's not going to be easy. And because of that, we do see a more volatile environment. He is making a lot of policy changes with respect to tariffs in dealing with trade in other countries. And that too raises geopolitical tension as well as trade fragmentation. That's the environment that we see going forward. Not easy. Having said that, I think if you look at Malaysia as a country, a number of things which actually is favorable for us. While we see it does have an impact on China, China makes up 14% of our exports, so it does impact us. But US makes up 12% of our exports, so that is also something. So we're actually pretty balanced as a nation when it comes to both. The other thing is we see a lot of investments, not just foreign direct investments which are happening, not just being committed, but are actually happening, but you also have domestic investments. You'll see more of the funds playing a role for domestic investments as well. And at the same time, consumption is resilient. So you do have something still strong going for us. And what we do need to do is to focus on the longer term productivity and innovation in order for us to basically benefit from this. Being in the middle, it's a bit scary because you have the two big giants, you know, the bald eagle and the dragon, so to speak, fighting. And we're a kancil, right? So we're being in the middle, but we're kancil, you know, we play it smart, right? So, so that's something that we have to do carefully. And our strategy going forward is that. Our strategy going forward is, first, is on Malaysia. We have to drive the value creation for Malaysia. I've already set out our Malaysian strategy. We will continue to diversify and strengthen our global portfolio because diversification works. Sometimes some markets are not so great, but we actually improve on others. Net actually, it's actually quite good for us. So we will continue to do that. Dana impact is crucial for the country, and we want to be more effective in what we do. Sustainability is a way forward. We want to look at how we can accelerate decarbonization and sustainable growth. And lastly, we want to make sure that we are inclusive and don't leave people behind. And this is where we focus on the Dayacipta component of community building, which is building capacity and vibrant communities. Okay, and with that, that ends my presentation, and we can open it up for Q&A.
Thank you so much, Datuk Feisal. With that, ladies and gentlemen, we are open for question and answer. To ask a question, please raise your hand. We'll have someone to pass you a mic. Please mention your name and the organization that you're from. Can we have the first question, please? Here.
Hello, hi, Adam here from The Edge. Thank you, Datuk, for the presentation. I have a few questions. Maybe I just start with the operations of Khazanah. So the operating profit for F1 5.1 billion is slightly lower than the 5.9 billion in 2023. So maybe you can share a bit on that. And my second question is regarding MAHB. My questions are, have you and your partners worked out who will be in the driver's seat, and has the consortium determined the professionals that will serve the company's board and management moving forward? And in relation to that as well, is there anything new in place as safeguards to ensure no political interference in terms of the upcoming appointments in MAHB? And my last question is in relation with news about medical inflation recently.
Sorry, new what, sir?
Relating to medical inflation recently. So Khazanah is a shareholder of one of the leading healthcare groups, i.e. IHH. This makes it seen as a GLC. So in your view, how will IHH social responsibility component kick in to address this matter? Do you think IHH has that kind of social responsibility? Thank you.
Thank you. I'll start with the first question. I think you're right. So we did 5.9 billion last year, right? But 5.9 billion does include an exceptional item, and this relates to the monetization of our plus bonds, which we did. It's a one-off thing. I think that was about 1.8 billion. So if you normalize it, actually, you know, operationally, it is actually a good year for us. That's one. The other thing is MHB, right? Who will be in the driving seat? You already have somebody in the driving seat, which is Datuk Izani, right? And by the way, have a look at the CV lah, and then you'll know who he is, ex-Khazanah CFO, was UEM, etc. Okay, so you already have somebody there. And in terms of the professionals going forward, I think, to be honest with you, it's way, way too early. It's way, way too early to even look at that question. I think you have a lot of good people within the airport itself. We have to look at them. We have to evaluate. Now, we have to look at what we need to do also. So I think it's a bit early to even think about that. But I think one thing that we would want to know is, what we would want to do is, we do have these objectives in mind to make sure that, you know, we get the connectivity right, we have the customer experience right, we'll make sure that we have the right people for the job. Political appointments. Well, thankfully, you'll notice that even today, as a listed company, there are no political appointments on